It started in about 2 minutes, but we thought we'd give you time to get in. I'm here this week with Greg again. Not the red hoodie, but the green hoodie today. He's far less socialist, apparently, according to his tweet.
Oh, I'm that. What is it? The red greens or something.
The watermelons.
Watermelons.
That's
yes.
right, the watermelons. Green on the outside, red on the inside, or something.
Yeah.
Yeah. We've got lots to talk about today. The RBA again seems totally confused about wages, and we now have the ABS data to show that. We've had a big housing announcement from National Cabinet.
Big. How's it coming?
Big. Well, with politicians, everything's a big announcement, isn't it?
Huge announcement.
Huge announcement. And the unemployment figures came out just today at 11:30. So we'll have a quick discussion. And they're showing that unemployment appears to be going up, maybe. But is it just noise in the data, or is it something actually happening?
Uppishy,
yes. So we'll get started properly at 2:30 in about a minute's time. We've shifted it to Thursday now, so this will probably be a permanent thing. We'll try and do the Nation in a Nutshell every second Thursday in the afternoon. So if you can join us, please do. If not, we'll be on YouTube and you can watch it later. So Greg, how has the fortnight been? We haven't started yet, but what do you think's the most exciting part?
Well, apart from the Matildas.
Ah, yes, sport.
Which kind of slightly overshadowed just about every single thing. And you see, when we're talking numbers, record numbers of people watching it last night.
Yeah, that's true.
But I saw that there was still apparently 320,000 people were watching a repeat of Hard Quiz, which is like...
Hard Quiz is pretty good. If you're not into sports ball, then perhaps, you got to watch something.
Jeez. But yeah, no, apart from the greatness of the sport, it's been a fairly interesting, big week, really.
Yeah.
We've had interest rates, we've had wages, we've got unemployment as we have every fourth week. So there's been a fair bit going around, and also we got the government trying to make a bit of a splash with housing, which remains a massive issue, massive hot button issue everywhere, whether you're a homeowner, home wannabe owner, or a renter. And so we'll definitely be dealing into that space.
All right, so let's get started. Welcome to Nation in a Nutshell. We might kick off, Greg, with...
Should we introduce ourselves first?
Yeah, I'm Matt Grudnoff. I'm the Senior Economist at the Australia Institute. Thank you for reminding me, Greg.
Sorry, you're hosting jobs, but yeah. I'm Greg Jericho.
And you're the...
Chief Economist at the Australia Institute.
All right, let's start with the wages data, and that leads into the RBA and all of their weird shenanigans. So the wage price index, which is not the only but the main measure of wages growth, came out this week. And it showed that wages increased by 3.6% when you annualise it over the last 12 months. So for the last 12 months, 3.6. But that's actually down slightly. It's not as fast as it was the previous quarter. The previous quarter it had been up 3.7% for the year. Now, I'm a little confused, Greg. I'm a little confused. We have heard nothing for at least the last 12 months or more about a wage price spiral. There's going to be a massive wages outbreak. I was looking forward, Greg, to a wages outbreak where my wage would actually go up.
Look, I'm getting really close to retirement in the next decade and a half and 2 decades. And I'm starting to worry I'm not going to see a wage price spiral or a wages breakout in my working lifetime. It was a bit of a surprise. Most economists, and I have to admit, even myself, I was expecting a little bit of an increase. You would expect it to go up a little bit, but not going down. This is was a bit out of the box. And it's not really a good sign, to be honest. 3.6 is. It's a good sort of medium-term level of wages growth that you'd be quite happy with in the best of times. It's not the best times, though, when unemployment is rising at 6%. That ain't the best times.
Not unemployment, inflation.
Inflation rate is 6%.
Yeah, so our real wages are still going backwards.
Real wages still going backwards, although... If you look at the quarterly in June, wages went up 0.8%, which is the same amount that prices went up in that quarter. So you could technically say, real wages
for one quarter, Greg.
Well, given that there'd been 11 quarters of real wages falling, but when you look at the figures, the only reason why the overall average went up by zero point 0.8 is that because there was some fairly solid wage growth in construction and mining, a little bit in transport and warehousing, and some in the sort of the utility sector. All the other industries, health, education, professionals, warehousing, retail, hospitality, all of those industries' wages rose by less than prices. So, yes, overall, wages
Good old averages.
Yeah, overall, on average, real wages weren't falling, but for most workers, real wages still going backwards. And certainly, if we look at the past year, everyone's real wages are still falling. So, not good news, and not good news because we should be seeing real wages increasing. They should be accelerating, not decelerating.
Yeah, so we've got a question here from Brenda, and if you've got any questions, please put them in the chat. Why has Jim Chalmers allowed the RBA to continue on in this exact craziness? So, yes, I mean, Greg, like, they were saying that wages were going to explode. They were worried that they were going to break out, but they've been well below inflation, so they can't be the thing driving inflation.
Yeah.
So why is the RBA's craziness allowed to continue?
Well, we should say, firstly, Jim Chalmers hasn't allowed the Reserve Bank. He can't quite sort of tell them specifically what to do, because remember, we must say, independent Reserve Bank.
Yeah, independent Reserve Bank.
But you're quite right. The Reserve Bank is operating on this assumption that so long as unemployment is below 4.5%, that inflation and wages growth will accelerate. It'll keep getting faster.
And that's the NAIRU, the non-accelerating inflation rate of unemployment.
So if that was a real thing, 3 months ago, wages were growing at 3.7%. We're still under 4.5% unemployment, even with today's figures. You'd expect wages to now be going 3.8 or 3.9%. Instead,
they continue to accelerate. They get faster and faster.
They're actually decelerating. Now, that doesn't mean that we're at the peak. Probably in 3 months' time, there might be a little bit of a boost because of the award increases and the minimum wage.
Yeah, so to be clear, this is just quarterly data. And it could be a bit bouncy, but usually if you're having an accelerating, you should continue to see growth in the trend.
Yeah, there was some fairly good acceleration this time last year, but that was coming off the lockdowns, and you'd expect to see that. But all acceleration is basically disappeared. What we're seeing, really, if you take away the increases from the minimum wage and the award wage last year, if you take that away, pretty much wage growth has been fairly flat for...
Yeah, so the market is certainly not pushing wages up.
No, and it's one of these thing about the NAIRU, this non-accelerating inflation rate of unemployment, is it operates under the assumption that there's this wonderful clearinghouse of labour where anyone who wants a job can pick and choose where they want their jobs, when they want their jobs, how they want their jobs, and also that the bargaining relationship is so equal and competitive that if there
workers
is
can demand more.
they can demand more, and not only that, employers will be bending over backwards to pay them more because they'll want to get that really good labour and keep their own labour. It's a wonderful theory, but what we're seeing very much is that it's not happening, and it's not even happening in inflation. If we look at the prices, as I think we looked at last time, inflation's falling. Now, if inflation is going down and we are a percentage point, as we were at the time, below this non-accelerating inflation rate of unemployment, why is it not accelerating? Why is it decelerating?
Yeah, just a really quick explanation of what the NAIRU is. It's basically that the economy has grown so quickly that unemployment has become so low that firms can no longer find workers in order to make the stuff that they've got demand for. So that firms are seeing this big demand for stuff that they're making, and they can't find the workers. And the theory says that, well, what they'll do is they'll increase their prices because they can't make more, but the demand is there, so they'll earn bigger profits that way. Or they'll start poaching workers from other firms by offering them higher wages.
Yep.
So if we're below this NAIRU, this apparent NAIRU, then the theory tells us that inflation should be accelerating faster. Well, no, it was 7.8% at the end of last year, and it's now come down to 6%. And wages should be accelerating faster.
Yep.
Well, we've seen that sort of flatten out. And, it is only one quarter, but it should be accelerating, not slowing down. And so, and there's very little real world evidence for the NAIRU, even though the RBA and the Treasury love this concept. Most academic economists and most of the economics profession has moved on from this idea of the NAIRU. It was big in the 80s and 90s, but largely it's been kind of left behind.
It's a wonderful thing to look at in your rear vision mirror and say, it's probably now about 4%. We thought it was 5, now it's 4.5, now it's 4. It's not something you want to be using to target anything, because even the Reserve Bank, when it puts out its estimates of the NAIRU, has massive margins of error on it of about 1.5 percentage points of it's somewhere between 4 and 5 and a bit. It's really not something that you'd be suggesting we need to raise interest rates to get to. What they should be looking at is what's actually happening with the inflation, what's happening with wages, and also what we're seeing though with the reason why wages are not rising is it's just further evidence that the industrial relations landscape is so massively tilted in favour of employers.
Even when we have such low unemployment rate, 40-year low unemployment rate, workers still can't get a decent pay rise. Well,
close to 50-year low, really. I mean, 40, 50-year low unemployment rate and maybe 10-year-ish, 8-year high wages growth. I mean, we should be seeing wages growing by at least 4%. With this unemployment rate,
Darren has a great question here, which we often hear about. It's about productivity. He says, as I understand it, wages still haven't caught up with productivity. That said, as I also understand it, from a producer's point of view, wages haven't overshot productivity. So how do productivity and wages kind of link together? Should wages only increase by the amount that productivity increases by?
Well, real wages at least should.
Yep, that's important.
The thing.
So what's the difference there?
Basically, what the equation that most economists talk about, and certainly the Reserve Bank and the Treasury Department have talked about, is that wages should grow at a rate that is essentially equal to inflation plus productivity growth. So the standard thing is we want inflation to grow at, say, 2.5% to be nice and balanced. That's right in the middle of the Reserve Bank's target. Let's say we can get productivity rising at 1%. Well, 2.5 plus 1 equals wages growth of 3.5%. And if you've got that, even though wages are rising faster than inflation, because of that 1% productivity growth, wages are not actually inflationary, because you're basically just paying workers the gains of productivity. You're producing more with your time, and you should get rewarded with that, and that's how we raise living standards.
If inflation's 6%, right, and productivity is basically 0 at the moment, but wages are 3.6%, then wages are deflationary at the moment. They're below.
Wages are absolutely deflationary at the moment, and there's been some sort of talk, I know in the past, people, when wages, inflation was a lot higher even, that they were saying, oh yes, it's we could have wages up higher than 5-6% and that'd still be deflationary, but it would make it hard for the Reserve Bank to get back to that inflation target of 2 to 3%. Well, I'm sorry, at 3.6%, you're still right smack bang in the middle of where medium-term wages should be, so that you can have inflation at 2.5 to 3%.
And often when they talk about productivity, it's kind of by, businesses and governments, RBAs and treasuries and the like, they kind of essentially assume that productivity growth will just flow straight into wages. Is that true? Like if we suddenly saw productivity at 1% and inflation got back down to 2.5%, would that mean we'd always get 3.5% wage increase?
In an ideal world, and we live in an ideal world. No. Over the past... there have been periods where inflation, real wages did rise in line with productivity. During the 90s, we did see that happen for a fair portion of it. Since 2000, since the turn of this century, we have seen real wages fall well behind productivity. Basically,
so they don't have to give you the productivity. Your boss doesn't have to give you the productivity.
It's exactly as we was talking about before with the weak wages growth. When you've got the IR system massively in favour of employers, essentially what you have with wage negotiations is a bit of a fight over the gains of productivity. Who gets the benefit? And
So it could go to wages, or it could go to profits. Yeah.
And what we've seen over the past 20 years, and certainly in the past 5 to 10 years, massively going towards profits rather than to wages. And so, in a sense, workers are owed a fair bit of back pay for their productivity gains. The problem, though, we often see is productivity is talked not so much about, how much you're producing in the time. It's actually about sort of profits rather than productivity. Productivity has nothing to do with profits, but we always see this argument being put that, we need to lower labour costs, we need to keep your wages down to improve productivity. It's got nothing to do with it. All that is employers basically saying, you're working a lot better than you used to, thank you, we'll take the benefit of that rather than actually rewarding workers. Yeah. So, not good. And good question, though.
One more question from Bunga, who asks, it's disappearing on me. Why can't the Reserve Banks suggest to take a percentage of workers' wages and put it in their super? So change the super guarantee instead of continually raising interest rates. This would be much fairer across the board. You're absolutely right, Bunga. If what the RBA is trying to do is reduce aggregate demand, total demand in the economy by increasing interest rates. Yep. If you've got a mortgage, you pay more in interest, you've got less money, less aggregate demand for everything else. There's nothing magical about interest rates taking out that demand. It can be done in lots of ways. It can be done by increasing taxes. It can be done, as you say, by forcing workers to put more money in their superannuation accounts for a period of time. That would reduce how much money you have to spend. The advantage of that is rather than it going to higher interest rates, higher bank profits, higher people who have large deposits. So wealthy people get basically gains from higher interest rates. It would actually go to the workers. You wouldn't actually lose it. You couldn't spend it now, but when you eventually retired, you'd have a larger super balance and you could spend it then. So absolutely. There are alternatives to increasing interest rates.
I mean, the main problem with that, though, is that, as we've been saying, wages at this moment are not driving inflation, so we don't need to lower the wage growth to go into workers. In fact, they're not getting enough. But you're right. If it was a case where, let's say, inflation was around 4%, but we were seeing really strong wages growth up around 5-6%, and we were getting this mythical wage price spiral, that certainly would be something that we could do. It's like, okay, you're getting the wage growth, but the government either is going to force that to go into savings, or they could introduce an inflation levy, which was a bit like adding on something to the Medicare levy, taking money out of the economy, reducing that aggregate demand. But as we've been, certainly at the Institute, banging on about, this is not about aggregate demand. It's not about workers having too much money and spending madly and raising up the prices or anything. It's not that at all. It's mostly coming from the supply side issue, and also companies going, good time to raise prices.
And how do we know that? Well, if the inflation was supply side inflation, if it was a supply side crisis, then essentially it would go away by itself. And what are we seeing across the world right now? Inflation's coming down as those supply side issues have resolved themselves.
And rather laughingly, I was seeing a report, oil prices, due to some things that OPEC are doing, might be going up, and this is going to wreck the Reserve Bank's plans. It's like, well, the Reserve Bank can't do anything about oil prices, can't do anything about OPEC.
Higher Australian interest rates are not going to change world oil prices.
It really, if that happens, and hopefully we have sort of seen it happen, but hopefully petrol prices don't go up too much, the Reserve Bank should be looking at that and going, well, there's nothing to do with us. And in fact, the government at that point should be thinking, okay, what can we do to actually help, especially low-income households who are getting smashed by high oil prices and the sort of the secondary effects. And
you could have super profits tax to help them.
Yeah, I wonder if there are any gas industries that are linked to oil prices
that are making quite a bit of money at the moment.
I don't know.
Yeah, quite a few of them, I think.
Might have to look into that.
Yeah. And One last thing in this area. So the RBA released its minutes where it basically said, we've left interest rates on hold. We want a little bit longer to think about what might be happening in the economy, to see some more data. Well, since then, we've seen wages haven't grown as fast as they thought. We've seen household spending is coming down. We've seen unemployment today creep up a little bit, and we'll talk about that more in a second. What are the chances of us seeing, and I know everybody asks economists to predict the future, and incidentally, we're really bad at it. I don't understand why you keep doing it, but what are the chances that the RBA is going to put up interest rates in the future then?
Well, if they do, they are increasing them for reasons that have nothing to do with anything to do with economics. That if you're holding off on increasing interest rates because you're looking to see some signs of reasons to do it, nothing we've seen.
Yeah.
In fact, the opposite. It's almost a case of, geez, did you go a bit too far?
Yep.
Everything's sort of slowing, peaking. It's kind of a case of if all the things that the Reserve Bank kind of was hoping would happen are starting to happen. Some of it's because of what they're doing, and certainly the unemployment rate is linked to it, and wages probably not. There's, as we were saying, the IR system is pretty bad. Inflation probably not, because there's a lot of world prices coming down and things like that. So any further increase in interest rates is really just going, we want to get to 4.5% unemployment because
we want to make more unemployed people, and that's like over 140,000 extra unemployed people.
I would be I've been wrong many times this year on the Reserve Bank,
as all economists
but
have.
I would be shocked if next September. Christ, we're already up to September.
That'll be Philip Lowe's last meeting. I'd be shocked if they raise interest rates, and if they do, they would need some pretty solid reasoning for doing so. They don't have any,
and they haven't got any at the moment. So
let's move. We've mentioned it a couple of times. The unemployment figures came out just today at 11:30. And they're up slightly. So it was 3.5%, and they've gone to 3.7%. Does this mean the economy is falling to pieces, and we're seeing increases in unemployment? What do you reckon, Greg?
We don't really want unemployment to rise. No. It's never. Everyone likes to sort of bash the unemployment rate, and you can read too much into it. But as a general rule, you'd rather it to go down than go up. It is a bit noisy, but the trend sort of level, which kind of takes a bit of an annual sort of average of where things are going, is starting to tick up, which is a little bit of a concern.
Yeah, so the unemployment rate has basically been bouncing between 3.5% and 3.7% every month, right? Jumping between either that, 3.5, 3.6 or 3.7 for over 12 months now. And remember, this is monthly data. It's a bit noisy. It does jump around a bit. And so what we've seen is it's gone from the bottom end of its kind of range to the top end of its range, which could mean that unemployment's getting worse, right? It's clearly gone up, or it could just still be bouncing around in that range.
Yeah, and interesting, I was having a deeper sort of look into the figures, and the unemployment rate, they have male and female unemployment. And male unemployment actually stayed steady. There was quite a significant jump in the unemployment rate of women. Now, again, that can be due to samples. It can, as soon as you start sort of digging in and you start seeing sort of erratic things happening, that can be a little bit of a maybe wait and see. I don't think, seeing anything that would suggest that we're about, the economy is about to tip over and we're going to see a massive spike in unemployment. But it just reinforces
but there are storm clouds.
And it reinforces the Reserve Bank should not raise interest rates any further, because we are seeing this happen. And we're
seeing spending falling. We've seen economic growth come right down. There are a whole load, and because of higher interest rates and higher rents, the cost of housing has massively increased. And so there are kind of economic storm clouds there. This is an uptick, but we'll probably have to wait for another few months to see whether or not this is just a bouncing around, or whether we've actually broken out and we're going to see a real climb in unemployment. And hopefully we're not, because unemployment is probably the worst. I think far worse than inflation.
Oh, absolutely.
Unemployment is the thing that we don't want to see increase.
Yeah, and one of the worries when we look at that, the spending figures that came out last week, the household spending figures, we saw that all of the spending increases happening in the non-discretionary items, the things you can't avoid, your energy bills, your rent, food. those things, that's where spending's going up, and we're talking nominal figures, so going up due to inflation. But discretionary items, things that you buy when you're feeling quite good, you want to go out and spend some money, whether it's going out at night, whether it's buying some clothes, whether it's going to the movies, that kind of spending fell, and that's including the increase in prices. So the fact that it went down, even in current dollar terms, means people are really stopping spending on these discretionary items, holidays, things like that. Why that is a big worry is because they're the kind of industries that actually employ a lot of people. There's a lot of services that are in those discretionary items.
Which are big employers.
Yeah, a lot of the retail sector, in the department store kind of specialty store retail sector, rather than sort of Coles and Woolies. So when that kind of spending slows down, when the fun spending starts slowing down, that actually employs a lot of people, that starts getting worried. So really, if you look at all of those things together, the Reserve Bank, as we'd been saying should have been stopping back in March, because we could already see that
all
the
the interest
impact
rate
was
increases
happening.
this year shouldn't have happened.
Yeah, and now we're seeing the wave is starting to crash over the wall, in a sense, and a lot of people are kind of going to start struggling, not because of the most recent interest rate rise, but for maybe the 2 or 3 beforehand that hadn't showed up in the figures yet. Now they're starting to flow through. So, God, I hope the Reserve Bank is at least awake and realises that it's done enough damage to the economy. And let's be honest, that's what it wanted to do: raise interest rates to damage the economy, to slow the economy,
To increase unemployment.
decrease unemployment. That's all it is.
Yep. And Darren's got another question here about underemployment and underutilization. Using seasonal figures added in underemployment and so if you add the unemployment rate and the underemployment rate, you get the underutilization rate.
Yep.
So these are all the kind of people who want underemployment is the people who want more hours. So they're working less hours than they want. He says that's up to 10.1%, whereas previously it was 9.3% in September 2022, so about a year ago.
Yeah.
So underutilization, this kind of hidden unemployment, if you like, is on the rise.
Yeah, and underemployment is quite interesting, because actually, sort of at the start of middle of last year and going to the end of last year, it actually fell quite dramatically. It was quite unusual how low it fell, and now it's going up. And why that is really important is because that is actually very strongly linked with wages growth, even better than unemployment, which sort of shifts around. But if you look at underemployment and wages growth over the last 20 years, it's just about a straight line, apart from during the lockdowns. And the only way you're going to get wages growth really solidly staying above 3.5%, getting close to 4% where it should be, is getting underemployment down. So you're right, seeing underemployment rise and that sort of underutilization, which is unemployment plus underemployment together, when that starts rising, that also suggests that people are working, but they're not getting as many hours as they want. Maybe they haven't become unemployed, but they've lost a shift.
Yep.
And that's the thing that economists are always looking for first, to see if things are starting to go down. And what we would hope is, if we've seen unemployment tick up from 3.5 to 3.7 maybe over the past 3 months, if you look at the trend, if it keeps going, the Reserve Bank doesn't just have to sit around and do nothing. You can go, whoops,
you've gone too far, time to cut interest rates.
Time to cut interest rates. And I wouldn't be surprised if this next month the unemployment rate doesn't show any signs of improvement. I think we'll be starting to see a few articles and things like that where people are saying, forget about interest rate rises. The next movement's
going to be up.
Going to be going
down.
We're
almost running out of time, and we've got one more big issue, and that was the National Cabinet housing announcement. So all the state premiers and the Prime Minister got together, and they made an announcement saying that rather than build 1 million homes, they're going to build 1.2 million homes. In a year's time, over 5 years. So it's not going to happen for another year, and then it'll take them 5 years to do that. And they also made some commitments to stronger rental rights. So does this mean the governments, I should say, the state and territory governments as well, are they going to actually build 1.2 million homes themselves?
No, they're going to provide incentives to people to build homes and to invest in homes, and it's more about actually investing in homes and actually then those homes being rented out rather than certainly it's not a case we're seeing the public sector going or the government's going. You know what's a good bet? House prices and housing.
Yeah, so one layer of Australian society who thinks that buying a house is a bad idea is the government. Yeah. They seem to want to spend billions and billions of dollars, but at the end of it, they'll own no houses. They just want to give other people money, particularly large investment firms, not-for-profits, super funds, whoever it happens to be, to build housing. And the government ends up with none, which frankly is a pretty strange kind of thing to do.
And when look, it's 1.2 million is not nothing. But if we're looking at just before the pandemic hit, so the end of 2019, there was built in the previous 5 years about 1.05 million. So we're talking about 150,000 extra houses than you would have expected anyway. Now, is that a big increase? Well, you go back to 2019, was people thinking, gee, there's a huge amount of housing around, we're all
housing's
good.
Just flooding onto the market.
So it's better than nothing, but that's not saying much. And it really is, again, this sign of trying to privatize everything rather than, one of the biggest falls over the past generation, the past 20, 30, 40 years has been the scope of public housing. That used to be something that took up 10 to at times 15% of all new builds. Now it's 2%. Yeah. It's nothing. And it's all this, we'll give incentives to people to do it. There's plenty of incentives out there for people to actually build things, given the fact that the housing market never falls over. And even in a pandemic where everything was locked down, the economy basically shuttered, we still kept the housing market going. In fact, it went better than ever.
Yeah.
So, this sense that, we need to incentivize people to invest in housing. Well, maybe it's about looking at where the housing needs to be improved, and that might be in the lower.
So what you're saying, Greg, is if the government wants more housing, what it could do is just go out and build more housing.
Yeah, I wonder if there are any more housing. They could maybe employ people in some sort of works department. I'm just throwing out things here.
Take on new apprentices.
Train them, build them in local areas where those apprentices live. Maybe provide some jobs out in the
local governments. Increased density. Yeah. And look, the other thing was rental rights, which is another big issue. Yeah. Since rental rights in Australia are well and truly weighted towards landlords. Mm-hmm. In fact, in large parts of the country, you can get evicted from your house with no cause. The landlord can just say, sorry, we're kicking you out now. Here's your 3 or 4 weeks notice. Depends on which state you live in, on how long it is. Here's your notice. Out you go. I don't have to give a reason. So, if a tenant complains about, mold all through the house, or, the insulation's crap, or they're not fixing things, we'll kick you out and we'll get somebody else in. So there's talk about making these rules more uniform and cracking down. So getting rid of no-fault eviction. But curiously, there was a commitment to do it, but there was no timetable.
There's a commitment to get to a timetable, which is not going to have any impact on anyone at the moment. And, there's a lot of things that can be done right now because there are sectors or areas in Australia that already do have some better rental rules. The ACT is actually quite a bit of a leader, not only with rental price increases, but, even things like having almost basically a history of landlords so that people can actually find out if that landlord has been a good landlord.
You can rate your landlord?
Yeah. Things that actually at least prevent someone say, I'm hiking up the rent $100 a week, and someone going, I have to get out, and then you find that, they've listed it at basically a different price, and really they were just wanting to kick you out.
Yeah.
All of these things. And given that we know that there are more and more people who are becoming long-term renters rather than your short-term renters, like, to be honest, I was in my 20s with my wife at the time. We rented for a year and a half or so while we were saving up for a property, because back then you could afford to buy a little townhouse. Now we're having people who are renting their whole life. and getting to retirement. So we need to adjust our rental laws, and we need to realise that Australia has pretty shitty rental laws. If people from Europe would look at ours and just be horrified at the lack of rights that people have. And it's something that, okay, fine, if we're going to have a system that is designed towards encouraging investors to have rental properties, then we've got to look at the other side of the equation and actually give strength
if we've
to people who have
decided
got renters.
that we don't want home ownership, that we've decided that investing in property is a better deal, then we need rental laws that don't favour the landlord, they favour the renter.
Yep.
If you're going to have to rent your whole life, you should have laws that protect you. We're actually out of time. It's past 3 o'clock. There were some great questions there. Sorry we didn't get to them. Please tune in a fortnight's time, 2 weeks' time on a Thursday, where we do it all again. We'll talk about the news. I'm sure housing will stay in the news. It's a huge topic, and as well as all sorts of other things that will be happening. So thank you very much for watching, and we will see